This isn't a story about millions. It's not a Wall Street fairy tale. These are my rules. Rules that built fortunes. Rules that buried the arrogant. Rules that can protect your capital and sharpen your edge, if you're wise enough to follow them. I didn't guess. I never trusted luck. I watched. I waited. And when the time was right, I struck. Hard. Most traders lose because they want action. They confuse movement with progress. They gamble. I didn't gamble. I operated. And now I'm going to give you the same rules I followed, the same rules I lived by, so that you don't have to learn the hard way like I did. Follow my rules, or lose everything. Before we begin, subscribe now, like this video, and leave a comment. That simple action helps more people see this content. And it tells me that sharing these lessons still matters. Now listen closely, because these rules were written in blood. My own. The market is never wrong. You are. There is only one side to the market, not the bull side or the bear side, but the right side. And the market is never wrong. Ever. You are. The sooner you accept that, the sooner you stop trying to outsmart something that doesn't even know your name. In my early years, I made one of the worst mistakes a trader can make. I tried to predict the market. I had a theory. I had logic. I even had confidence. But the market doesn't care about your confidence. I remember watching a stock push upward with strength, volume, momentum, everything was there. But I thought it had gone too far, so I sold short. I bet against the trend. You know what happened? The trend didn't care. The stock kept rising. I lost. Badly. That moment branded itself into my memory. I realized the market doesn't punish you because it's cruel. It punishes you because you refuse to listen. From that day forward, I stopped fighting the tape. I stopped trying to guess what should happen and started reacting to what was happening. If the market tells you it's going up, you follow. If it says it's going down, you don't argue. Never try to prove the market wrong. You'll only bankrupt yourself trying. Your opinion doesn't move the market. Your money does. And if your money's on the wrong side, you're finished. Buy what's going up, sell what's going down. This rule is simple, but don't let its simplicity fool you. It will make or break your career. It never was my thinking that made the big money for me. It always was my sitting. I didn't buy stocks because they were cheap. I didn't buy them because I liked them. I bought them because they were moving up. Momentum isn't random. When a stock rises on volume, it's not a fluke. It's a signal. A signal that someone knows something. A signal that money is moving in. Most traders do the opposite. They try to catch the bottom. They look for discounts. But cheap stocks are cheap for a reason. Because no one wants them. I made my biggest trades on stocks that were already climbing. Railroads, steel, oil. The public called them overbought. I called them winners. Let me be clear. When a stock breaks out to new highs, and it does so with conviction, that's not the time to hesitate. That's the time to act. Same rule applies in reverse. If a stock is falling, don't try to be a hero. Don't try to guess where it might bounce, sell, or stay out. I made money by riding waves that already started, not by trying to start my own. The trend is your ally until you decide you're smarter than it. Then it becomes your executioner. This is not about catching the first penny. This is about positioning yourself in the direction of strength and staying with it until the market says otherwise. Never enter without a clear entry point. There's no room for hope in trading. Hope is not a strategy. Confirmation is. I never bought because I felt like it was the right time. I waited for the market to show me it was. Most people lose money because they want to do something, anything. They think trading is about being active, but trading is about being precise. I studied the tape. I learned to recognize what I called pivotal points. Moments when price action confirmed a real shift. Not noise, not emotion, actual market intent. I'd sit and watch for hours, sometimes days. And when that point appeared, when the stock broke a level with volume, with strength, that's when I entered. Never a second before. Let me give you an example. There was a stock trading sideways for weeks. Most had given up on it, but I watched, quietly. I saw how it refused to go lower, how volume started creeping in. Then, bang, it broke through its resistance. That was my green light. I didn't chase noise, I waited for clarity. If you enter too early, you expose yourself to randomness. If you enter too late, the opportunity is gone. But if you enter with confirmation, with discipline, you give yourself an edge. I never guessed. I positioned. Let me repeat. Don't anticipate the market. Let it tell you what to do. Position size matters. I never went all in. Only fools do that. Position sizing is not just risk management, it's strategy. I built my positions as they proved themselves. If a stock moved in my favor, I added. If it moved against me, I cut or stepped back. Let me make this crystal clear. You do not double down on a loser. You add to a winner. When I entered a trade, I didn't buy my full size at once. That's gambling. I would start small, test the waters. If the trade began to work, if the market confirmed my direction, I'd increase size. Gradually, intelligently. Here's how I did it. Suppose I planned to buy 3,000 shares. I'd begin with 1,000. If the stock advanced and held, I'd buy another 1,000. Only if it continued to confirm strength, I'd buy the last 1,000. That way, the market paid me to increase my risk. Not emotion, not prediction, just logic and momentum. I was never afraid to go big, but only when the trade earned it. Too many traders blow up their accounts because they bet everything on their first move. They fall in love with the idea, and then they lose, fast. Your position should never be bigger than your discipline. Risk is always present. But when you build size based on strength, you shift the odds. I didn't build empires overnight. I built them one confirmed move at a time. Exits matter more than entries. Anyone can enter a trade, but only the disciplined know when and how to exit. And make no mistake, how you exit determines whether you win or just get lucky once. In 1907, I made my first real fortune. Not because I caught the top, not because I predicted the exact moment of the crash, but because I knew when to get out. While others held and hoped, I sold. I didn't need to time perfection. I just needed to protect profit and preserve capital. I followed the same rule every time. When the market tells you it's done, believe it. I'd watch price action shift, volume dry up, momentum weaken. These were not accidents, though they were signals, and I acted. Most traders don't fail because they can't find good entries. They fail because they let winners turn into losers, because they let hope replace discipline. I never married a trade. I never held just a little longer because I wanted more. If the market turned, I turned with it. Sometimes that meant giving up potential upside, but more often it meant keeping what I earned while others watched theirs evaporate. It's not how high it goes. It's what you walk away with. So remember this. You make money when you exit, not when you enter. A good trade isn't complete until you close it. On your terms, not the market's. Don't listen to advice. Listen to the market. Let me be honest with you. The worst losses of my career didn't come from bad trades. They came from listening to people, brokers, friends, newspapers. They all had opinions. And sometimes those opinions sounded brilliant. But they weren't based on the tape. They weren't based on price. They were based on ego, emotion, or noise. One time I ignored what the market was telling me, because someone I respected gave me inside information. The result? I held when I should have sold. I waited when I should have acted. And I lost. Badly. That was the last time I let someone else's voice drown out the message of the market. From then on, I listened only to the one thing that mattered: price action. The tape doesn't lie. It doesn't care about rumors, opinions, or predictions. It shows you what's real. Volume, direction, momentum. People will always try to sound smart, but the market doesn't reward sounding smart. It rewards being right, and that comes from watching, not talking. I trusted the market, and only the market. So here's my rule. Don't take tips. Don't follow crowds. Don't outsource your brain. If you can't trust your own analysis, you have no business trading. Learn the market. Read the tape. Build your edge. And when everyone's shouting, you stay silent and let the chart do the talking. Separate emotion from execution. Trading is not emotional, but traders are, and that's the problem. A man must believe in himself and his judgment if he expects to make a living at this game, but he must also act without emotion. I've made and lost fortunes, not because my system failed, but because I let fear, greed, and ego take over the controls. I've chased trades I had no business entering. I've hesitated on trades I should have executed instantly. Why? Because I was human. But I learned, painfully, that emotion is your enemy. It clouds judgment. It delays action. It whispers lies. You see, the market is already difficult. But when your emotions become part of your decision-making, now you're fighting two battles: the external and the internal. I had to build habits, rituals, rules I followed regardless of how I felt. If a trade hit my stop, I got out. If the signal came, I entered. No hesitation, no hope, no panic. Was it easy? Never. But necessary? Always. Discipline is what takes you from gambler to operator. I kept records. I reviewed my trades. I studied my own behavior as much as I studied the market, because I knew even the perfect system will fail if you sabotage it with your emotions. The biggest profits come when you do nothing. Let me tell you a truth that most traders never learn. The real money is made in the waiting, not in the trading. Everyone wants action. Everyone wants to feel busy. They think activity equals progress. But that's a lie. Some of my biggest profits came when I did absolutely nothing. I entered the trade, the setup was there. The price moved in my favor. And then I just sat. I didn't tinker. I didn't lock in small gains. I didn't try to be clever. I sat. I waited. I let the market work for me. Most traders destroy their profits by overmanaging. They cut winners too early. They chase new setups instead of letting a good one run. Why? Because doing nothing is hard. It feels like you're not in control. But that's the paradox. You gain control when you learn to let go. There's a famous quote they attribute to me, and it's true. It was never my thinking that made the big money. It was always my sitting. When the trend is in your favor, your job is not to outthink it. Your job is to hold. I built empires by sitting on trades while others were shaking out, second-guessing and scalping pennies. You want to know the secret? Patience pays more than talent. Discipline to enter is good. Discipline to exit is crucial. But discipline to wait, that's where the fortune lies. Learn from losses, don't excuse them. Losses are part of the game, but how you react to them defines whether you stay in the game or get wiped out. There is nothing new on Wall Street. There can't be, because speculation is as old as the hills. And still, every generation repeats the same mistakes. When I lost money, it was never because the market betrayed me. It was because I betrayed my own rules. I once made a fortune, then gave it all back. Not because the system stopped working, but because I stopped following it. I broke my own discipline, ignored my stops. Let pride speak louder than price. And then came the loss. It wasn't just money, it was time, it was momentum, it was confidence. But I didn't make excuses. I didn't blame the market. I sat with it. I analyzed the mistake, and I rebuilt, with sharper edges and fewer illusions. Every mistake carries a lesson. Most traders ignore it. That's why they stay broke. Losses are tuition. If you don't learn, you paid for nothing. You want to become a real operator? Then stop protecting your ego. Start protecting your capital. Don't justify a bad trade. Dissect it. Write it down. Study it. Because the only thing worse than a loss is repeating it. Success is a system, not intuition. If you remember only one thing from everything I've told you, let it be this. Success in trading doesn't come from feeling. It comes from structure, from rules, from system. I didn't rely on luck. I didn't trust my gut. I built a system, and I followed it. Rules for entry, rules for exit, rules for size, rules for sitting, rules for loss. Each one protected me from myself. The amateurs say, I just had a feeling. That feeling cost them their account. The pros say, I waited for confirmation. I followed my plan. I stuck to my system. That mindset built empires. Don't chase perfection. Don't chase magic setups. Chase consistency. Because in this game, it's not about being brilliant. It's about being repeatable. If your strategy can't survive your emotions, your drawdowns, or your mistakes, it's not a strategy. It's a bet. I lost everything, and I came back because I had rules, because I had structure, because I didn't let failure become final. You want to survive this game? Then stop guessing. Start building. Build a system. Stick to it. Adjust it. And respect it more than your own opinions. You don't need luck. You need discipline. You need control. You need rules. Follow my rules, or lose everything. If these words hit you, it means you're not here by accident. Subscribe now, like this video, and leave a comment. That simple action helps more people find this content, and it tells me that my work still matters.